Good morning. Welcome again to Pulse Policy. My name is Wanjiko Ng'ang'a, and this weekend we have said that we're going to be discussing on medical cover, and I'm just here to give you a guidance. By the time you are purchasing a medical policy, there are things that you need to find out or things that you need to understand when you are purchasing a medical insurance. So today I'll give you a guidance basically on when you're purchasing a medical cover, or what should you be looking at? And if you don't have one, why do you need to have a medical insurance? So it's very important for you to have a medical cover. And so that's what basically I'll be looking at. So I'll do this in a series. Medical coverage is quite wide, and so I may not be able to cover this in one session. So I'll take you through different. I'll start. This will be the first one, more of an introduction. So I'll do the detailed one later. But let's just see what we are going to look at today. So today, I want to look at the introduction to health insurance. I would also look at why we purchase health insurance. I'll also be looking at how it works. How does medical insurance basically work? And also the common product features that we have under the medical insurance policies. So I'll just start with just a small brief of what is medical insurance or what is health insurance and why you need to have a health insurance. So basically, health insurance policy is a type of coverage that covers you for medical. When you go to the hospital, you're definitely going to pay bills. All those expenses that you pay when you go to the hospital, you have, for example, if you're going for an outpatient, you're going to pay for consultation to see the doctor. Probably you're going to go to the lab. You're going to get medication, pay for tests, and all that. So that's covered by the medical insurance policies. There are those ones probably who are going for surgeries. These are all covered by health insurance policies instead of paying out of pocket. So what I keep saying is that it depends on what you want. I say medical. It's not something that you choose when it is going to happen or when it is going to occur. When it occurs, it's like an emergency. Once it happens, you have to spend. So the question is, are you going to spend out of pocket, or do you have an arrangement of where you can be able to take care of your medical expenses when they happen? The most unfortunate bit about medical coverage is that you cannot postpone. You can't postpone and say, I'm not going to get sick today. I'll get sick next year, because next year is when I'll have organized myself to pay these bills. Sometimes even the surgeries, they come so fast, they come running, and they have to be paid. So this really helps you to cover up your medical expenses. And the good thing is that you can choose to either enroll yourself into the public health care system. So of course, we have the social health insurance under Kenya, and also we have the private medical insurances, which you can purchase from the various insurance companies. So everybody is eligible for medical insurance in Kenya, and that means there are those ones who are not able to fit within the private medical coverage, but the social health insurance is going to be able to cover you for that. That is the policy that the health cover that replaced NHIF, you can be able to get covered on that. So anybody can be able to get that coverage. Now, this covers, the benefits will depend on what you have purchased. Apart from, of course, the social health insurance, that one is open. It has its own benefits, but that's a topic that we can cover later. But for the private ones, when you purchase them, it depends on what you have purchased. So it depends on whether you have purchased an inpatient cover. Have you purchased an outpatient cover? Do you have dental? Do you have optical? It depends on exactly what you have purchased. But before I move away from this slide, the social health insurance, either if you are listening to me, you can either purchase for yourself. You are in business, you have not been enrolled into any private health insurance, or you're not able to purchase it. Please ensure you have enrolled yourself to the social health insurance policy under the government scheme. And if your parents or your relatives, they do not have this coverage, please ensure you also enroll them into the policy. That one is it's not expensive as compared to the private health insurance, but normally I keep saying the choice is yours. Now, This policy is normally, let's go to the private health insurance, who purchases. These policies are normally purchased by individuals. For example, you can buy yourself, you can purchase the policy for yourself as an individual. The policy can also be purchased for families. For example, you have yourself, maybe, let me start with a complete family, that is a member plus a spouse and plus the children. So you can purchase the cover like that. If you're single, you can purchase the cover yourself as the principal plus the children. So that's also family. We also have businesses, they purchase as groups or also corporate institutions. So it depends on in which way you want to purchase the policy. Otherwise, all these policies are available in the market. You walk to the insurance company, whichever company you've chosen to purchase the policy from, all these options are available to be purchased. So if you are in a group, mostly if you're purchasing as a group, you'll purchase with a minimum people of about 10, but you need to confirm that when you're purchasing as a group from the insurance company, but mostly you'll have more than 10 people. So as I mentioned, the cover will cover different limits for inpatient and outpatient. So when you go to purchase the policy, you're going to find that the inpatient will give you different limits. So I'll come back to that again. And also the outpatient, it will give you different limits. So when you're purchasing, you need to know what exactly do you want to purchase. Do you want to purchase the policy? Like for example, inpatient, you can get a limit of $500,000, 1 million like that. I'll explain later in a later slide. Now, how can you be able to purchase this medical insurance, or how can you get to purchase the policy? So one, you can walk to an insurance company that offers medical insurance. So you have various companies that are licensed by IRA to offer medical insurance. So you need to ensure that the company you're purchasing from, they have a license from IRA. Then you can also purchase it through intermediaries for those insurance companies that are authorized to transact medical insurance business. So you can purchase it, as mentioned directly, you can purchase it from their agents, you can also purchase from their brokers, and nowadays you also have the bank assurance channels from the bank. So whereas most banks nowadays, they have bank assurance channels, so you can easily walk into there and request to purchase a medical insurance. So in this market, we also have intermediaries who partner with insurance companies and they come up with their own product. Those are called joint products with an intermediary. For example, a broker can approach an insurance company and they come up with a joint product. And so that product can only be sold by that intermediary or broker. Maybe a bank can approach an insurance company and they develop a joint product, meaning that specific product can only be purchased from that specific intermediary. So sometimes you find that they have different benefits or product rankings depending on how they have negotiated from the insurance company. So there are different ways you can be able to get. So by the time you are going to purchase your insurance cover, please ensure you have really done a good research on these medical offerings. In most cases, you can be able to get different quotations or different offerings. You can compare one company from the other. And as I continue to do this series for medical insurance, I'll help you to see the differences or what are these things that you're supposed to compare when you're purchasing the medical insurance. What benefits should you be looking at? If you have a quotation from company A and you have another quotation from company B, what is this that you're supposed to be comparing? As I keep saying, when you're purchasing a policy, it's not about the premium. My clients, my friends, it's not about the premium. It's about the benefits that you are purchasing from the insurance company. Remember, there's a medical cover. It's supposed to pay your bills when you're in the hospital. So you need to get a very good understanding of what policies or what benefits you can get from the medical cover when you are purchasing the same. Now, let's see, why do you need to purchase a medical cover? And remember, I have said, these covers, you don't have to go for the private one. So don't say that you cannot afford a medical insurance. No, you can afford. You're eligible and you can afford. If you cannot afford the private medical insurance policy, you can afford the public health cover. That is a social health insurance. You can be able to afford that one. It's not expensive. And Why I say it's not expensive is because when you compare the bills, if you get sick today and you go to the hospital, if you compare the bills you're going to pay and how much you're supposed to pay for the health insurance, that's where the difference comes in. Even if you pay for a whole year, for example, let's take even the contribution of, for example, like 500 per month. If you go to the whole year, that's about 12,000. To 12,000. That's 6,000 per year, yeah. So if you go to the hospital and you are doing are paying a bill, how many bills are you going to pay with 6,000? Very few bills. But if you go for tests, if you pay that amount for the medical insurance, whether it's under the government scheme or the private, they're going to help you to pay your bills. So the first purpose of why I encourage people to make an arrangement for medical insurance is financial protection against now the high medical cost. For those ones who have had experiences with either yourself being sick or somebody who is sick, I'm sure you have experienced how difficult it can be to pay bills, and especially if you have someone who is constantly on medication throughout, they are paying bills, you're buying medication, every week you're spending money to buy medication. Going for surgeries, very expensive surgeries, expensive treatments, admissions, they're very expensive. Medical insurance helps a lot, a lot, a lot, a lot. Please, guys, if you're listening to my video, please make an arrangement. One of the benefits of the government insurance, as much as you have the private health insurance, when you get admitted to the hospital, especially, let's say, like, for example, in a private hospital, the first bill is normally paid by, or the first part of the bill is normally paid by the social health insurance. So it still comes first. So ensure that you have that. Otherwise, if you don't have it, you will cover that first part of the medical bill yourself. Let me repeat that again. So, for example, if you don't have, for example, if you're admitted, let's say, in a hospital, like, let me say, like what, let's say you are admitted in Nairobi Hospital, and the bill comes. So there's a section that is normally paid by the social health insurance, and then your private medical policy will kick in. So if you don't have that, then you'll have to cover that part, that for the very first part that was supposed to be covered by the social health insurance, you'll cover it yourself. So one of the reasons is to protect yourself. And actually the main one is to protect you against high medical costs. Crazy bills can come in and it can be an emergency, and you have to look for that money. The other benefit of medical insurance is the ability for you to access a wide range of medical services. You can be able to get very many services since you have a mode of payment. When you have a way that you can be able to pay for your medical coverage or your medical expenses, at least you're able to get good access to healthcare. Otherwise, if you don't have that money, for example, you're sick and you don't have money to pay out of pocket, most likely you're going to stay home. And at that time, maybe your condition is getting worse. But if you had a medical insurance, you're able to get services from the hospitals, either through government hospitals or the private hospitals. You can be able to get that service, for example, as long as you have the medical cover. Then from there, when you purchase this medical cover, especially the private covers, they come with other benefits, for example, the wellness benefits. So I'll be explaining this benefit as we continue with the series. So some will give you free membership to gyms. In most cases, you'll get your medical cover is going to give you a free medical checkup, mostly for the principal of the policy or the principal and the spouse for medical checkup. So they can give you a limit and the type of medical checkups that you can do in a year. So medical checkups means you don't have to be sick. You just want to confirm you are okay. You just want to do some health checkups to make sure that you are fine. Others will offer, most of them will offer counseling. So you're stressed up, you need someone to talk to. So they're able to give that as an extra benefit. Now, of course, when you have the medical cover, you're also able to get access to specialists. So you can be able to get access, for example, for somebody who has cancer, you're able to get a specialist who are dealing with that. You have a skin condition, you have ophthalmologist. So you're able to get access to different specialists. And of course, paying specialists is not usually very cheap. So it's a cost and you need money to pay them. So of course, when you have the medical insurance, it takes care of that. You have medication to purchase using the medical cover. So this also helps you quite a lot. And above everything, peace of mind. peace of mind. Insurance gives you peace of mind. When you sleep and you know if you get sick or your child gets sick or your family member gets sick, they have a medical cover. For those ones with parents, if you have insured your parents, you know clearly, even if they get sick, you can be able to access medical cover, or even if you don't live near your parents and you have given them a medical cover, all you need to give them is a medical card. So at least you know wherever you are, they can be able to access medical care, and it can be an emergency. You're not going to start borrowing money to cover their medical expenses. If you have a cover, it gives you peace of mind. So if you don't have a medical insurance, please get one. I can assure you, the peace of mind that comes with these policies, you can't compare it with anything else. Peace of mind for medical cover. Now, how does it work? Now, before we look at the medical covers, the benefits themselves, I need you to understand how the medical covers work. So if you purchase one, how exactly are you going to benefit? Or, I mean, how does it work? Maybe you're wondering, if I purchase this cover for medical, maybe it is not going to help me. Yes, it is going to help you. And before I explain the policies, I thought it is very important for you to first of all understand how the medical policies work. So first of all, medical insurance is a contract between the insured and the insurance company. The insured is yourself, you, the customer who is purchasing the medical insurance. So it's a contract between the two parties that when you get sick, the insurance company is going to pay, is going to fulfill the settlement of the bills based on the observation of also the policy conditions that are within the policy. So you are there and you want to get a medical cover. Where do you start? The very first place that you're going to start is by getting a quotation. And of course, you're going to start by probably reviewing. You contact maybe an agent, a broker, insurance company, walk to different insurance companies, get their products. They have, for example, you can request for the brochures or a write-up of the different products to understand those products. And then you get a quotation. And once you are happy with the quotation that you have gotten, then from there, you're going to purchase the policy. How do you purchase the policy? The very first document that you're going to fill is a proposal form. So just as I said from my previous videos, please do not let somebody else fill for you a proposal form, especially this one for medical. Nobody knows yourself better than yourself. You're the one who knows that medical policy or the proposal form is going to have a lot of questions that touch on your health. You're the only person who knows yourself the best. So you're the best person to answer that form to the best of your knowledge. And remember, in insurance, we talk about utmost good faith and also ensuring that you have given us all the information that we require, utmost good faith. Just be honest. Do not lie on that form, because if you fill incorrect information there, for example, the form is asking you about a condition and you have decided not to declare that condition, and you have gone to the hospital and you're expecting the insurance company to settle that bill for a condition that you never declared. It is not going to be paid, and you're going to get frustrated at that time you're in the hospital. And you're going to get frustrated. So and you're filling that proposal form, please ensure that you fill that proposal form to the best of your knowledge. Give the right information, give all the relevant information that helps the insurance company to make the right decision. Then from there, you're going to do the medical checkups. So medical checkups here come in where required. Again, where required. Mostly, you'll get for customers who are looking for policies and they are above the age of 50, they're going to be subjected to medical checkups, and this is on their own cost. So if you're above 50 years and you want to purchase a medical cover, so in most cases, you'll find that the insurance company will require you to do a medical checkup. This will be at your own cost. They're going to give you the list of hospitals where you can do that medical checkup. So when you get that list for the medical checkup, it's upon you to go and find out the cost of the medical checkups from the different hospitals that you're going to be given. For example, you're being given a list of 5 hospitals where you can be able to do the medical checkup. this hospital, the list probably is, the list has almost similar tests, but the cost that you're going to incur for those tests is going to be different from one hospital to another. So do not just go to one hospital to do the medical checkup. It's good to go and check, maybe compare hospital A, B, C, and D, or maybe A, B, C, maybe 3 hospitals, do a comparison. I am required to do a medical checkup. So if you go to hospital A for this medical checkup, how much am I going to pay? If I go to hospital B, how much am I going to pay? If I go to C, how much am I going to pay? So at least there is an option. So always ensure that you have checked. You compare the cost of doing that medical checkup. That helps you to save some money. Of course, once the medical proposal form and the medical checkup is where required is acceptable, then the next step you're going to pay the premium. Now, this premium is going to be dependent on various things. So first of all, it's going to be dependent on age. It's going to be determined by the size of the family, the cover option selected that includes both inpatient, outpatient, and in some cases, optical is charged separately, dental is charged separately, and sometimes maternity is charged separately. Other covers in the market are going to bundle that up into the inpatient and outpatient policy. Sometimes they don't separate. So again, when you're purchasing the policy, it's important to check. So I want to explain this in the next slide. When you mean by age, what do I mean? So age determines the price. First of all, the eligibility of just a minute, I connect some charger here. Yeah. So when we talk about eligibility or age, at what age does the insurance company accept policies? First of all, it starts from 38 weeks. A baby of 38 weeks and above is acceptable or is eligible for the medical cover within the cover for the family. And of course, when you're purchasing, you must be 18 years and above. You cannot purchase a cover when you're 18 years and below, although I have seen in the market currently we have junior policies for children below 18 years. I've seen that has also been introduced in the market. There are companies that have junior policies where you can be able to purchase a cover for a child as a standalone. So previously that has not been in the market. It used to be within, there must be a person who is above 18 years holding that, covering covering the person who is below 18 years. But currently now I've seen we have junior policies in the market. The maximum joining age for most policies will be 64 years. It will be 64, 65 around there. So you can find some companies will give 60, 64, 65. So I've just given a general view of the maximum joining age. So you need to find out the maximum joining age of the policy that you intend to buy. So different companies will have different maximum joining age. Now for children between 18 years to 24 years, they are covered within their family policy, but they must provide proof of schooling. So if you have children between the age of 18 years to 24 years, you'll be required to provide a proof that they're actually in school. So when you're purchasing that cover, ensure you have some proof to show that that child is in school. So currently we also have senior cover in the market. So I have said that most retail covers will be having a maximum joining age of 64 years. So currently now in the market, we have senior covers. This covers clients who are 65 years and above, and in most cases, they will be covered for life as long as they pay the premium. They keep renewing the policies on time, they will be covered for life. So that basically dependent on the renewals. So I've talked about the medical reports, which are required for customers who are above 50 years at their own cost. So I've explained that. So the premiums, they're determined by age because they're going to be graduated. So when you are doing the comparison for the medical cover and you're purchasing, so you'll find that the insurance companies will charge people between, for example, it is just an example. This is not standard. I'm just giving you an example. So you'll find that people who are between 18 years to 35 years, they're going to be charged a different premium from people who are 36 to 49 years, and they're going to be charged a different premium for 50 to 64 years. So this is just an example. So when you go to the market, you're going to find different different companies giving you different graduations. So so make sure you check your premium. If you are checking, for example, how much where you will be, ensure you check the right age where you are. So if you are between 50 to 64 years, check between that category where your premium is going to fall. If you're between 36 to 49, it's going to be different from 18 to 35. So that is different. Yeah. So that comes different. And also now, of course, we have the seniors above 65 years, you'll also have the premiums different. And of course, these premiums, they increase as the age increases. So for people between 50 to 64 years, they are going to pay more premium than people who are 18 to 35 years. Okay, so it's graduated like that. So depending on the age group or where your age is, your premium is going to, the cost or the premium you're going to pay is going to be determined by your age. That is number one. Now, two, the family size. Now, when you look at those quotations, they will, or the write-up for medical from the insurance company, it will come with, you see these wordings here? Let me just put here. So you have this M here. So you see this M here, this M+1, M+2 there. So when you get that write-up, it will come with this M. So M means, if you see M in those premium, it means one member, one person. Okay, the principal member only. For example, you are alone, like me, Wanjiko Nganga, I am just alone. I'm purchasing the policy as Wanjiko. So that is what M means. So if so going back now to now the age where we were previously, so you will check Wanjiko is between 18 years to maybe 35 years, and she's alone. So you check under the category of 18 years. So you will have the category of 18 years here to 35 years here. And then here you're going to have now the M. So the premium here is going to be here. If you're between now, for example, the 36 years to maybe like 49 years here. So the premium here again is going to be different. So you need to know if you're purchasing the policy alone here. So this M here, so you check if you are between this category, the premium here is different from the premium that is going to be here. So you need to ensure that you understand where you fall. Again, if it is M+1, that is the premium is going to be different from M. So if you are falling under the M+1, M+1 means, for example, Wanjiko and the spouse, so they're going to pay a different premium. So if it is Wanjiko and the spouse, of course, you cannot pay the same with a person who is purchasing, with a Wanjiko who is purchasing alone. That premium is not going to be the same. So this M+1, in some cases, you will find that the M+1 is the principal, for example, Wanjiko and a child, or Wanjiko and the spouse. So it depends on how the insurance companies have put the policies. In some cases, you'll find that the premium for children has been separated. So they charge children separate. So the premiums for children is lower. So it depends, again, you need to understand how the insurance company has charged you the premium. Then you have the M+2. M+2 now means me, Wanjiko Nganga, as the principal, maybe a spouse, and one child. So those are 3 people. It means M+2 means 3 people. So it is these two here plus the member. So these are 3 people. So these 3 people can be Wanjiko plus spouse plus one child, or it can be Wanjiko plus 2 children. So it depends on how it has been interpreted on the premiums being charged by the insurance company. So again, so if you have M here, and then you have now the M+1, here you have the now here +2. Of course, when you come here, you will not pay the same premiums. It's going to be completely different. So I mentioned here, some companies we are going to charge kids separately, so it's good to note. In some cases, where you have the M+1 is going to be the same, and in other cases, you're going to be having the premiums for the children charged separately. So you need to understand when you are purchasing the policy, or when you get that quotation, you need to understand how that premium has been calculated. Now, the third one is the premium is going to be dependent on the options that you have selected. So when you come, for example, for the inpatient cover, now inpatient is whereby you are purchasing a cover where you're going to be admitted, inpatient, you're going to be admitted in hospital. So you're going to be admitted maybe for a day, 2 days, 3 days, like that. So it's just inpatient. You are in the hospital, not for, this is different from daycare surgery. It's not whereby you go to the hospital, you are going in for maybe just 1 day procedure, and you leave. Of course, that also depends on the insurance company where you've purchased. Some companies will charge that and inpatient, and others will charge that and outpatient. Depends on where you have purchased your policy. So daycare surgery is also, I'll mention that when we come to the benefits. But now, when you're purchasing the inpatient cover, most covers will start from a limit of 500,000, 1 million, 2 million, 10 million, 20 million, like that. So it depends on what you're looking for. So it is a purchase. What do you want to buy? Do you want to buy a coverage of inpatient for 500,000? Do you want to cover yourself for 1 million? Do you want to cover for 2 million, like that? So it depends on what limit do you want to purchase. A person who is purchasing a limit of 10 million, a person who is purchasing a limit of 2 million, you cannot pay the same. The premiums are going to be different. Now, the same with the outpatient. A person who is purchasing a cover of 75,000 outpatient is whereby you're going to the hospital, you're going to be treated, and you go home. You're not going to be admitted. That is what we refer to as outpatient cover. Okay, and the outpatient cover, let me mention here, it is optional. So what is compulsory to purchase when you're purchasing the health covers is in the inpatient cover. You can purchase inpatient as a standalone, ikiwa peke yake. But you cannot purchase an outpatient cover alone. It has to go together with the inpatient cover. So again, depending on what you have chosen, it will also give you a different premium. Hope you are still together. Then again, we have now the dental and we have the optical. So some products, they will have the optical bundled within the inpatient and outpatient. So for example, if you purchase this 75,000, then the optical and the dental will be part of this 75,000. In other cases, you're going to find that this 75,000 is only for the outpatient, and then you purchase a separate cover for the optical and dental. And these ones you'll get mostly a cover of maybe 30,000 or 40,000. Sometimes 25,000. So it depends. So in most cases, you're going to find them within this limit. So I'll come back to this again when we're doing the detailed policies. So those are the main determinants of how your premium is going to be charged. So you have the determination by age. So your age is going to let me clear this. Yeah, so the age, we talked about the age, we've talked about family sizes. I've explained to you the meaning of all this, and also the premiums, the coverage, the cover options, the limits. This is very, very important for you to understand those limits. Yeah. Then, so once you have agreed, you have paid the premium, you're going to receive a document called a policy document from the insurance company. And because it's a medical cover where you're supposed to access medical services from the hospitals, they normally use cards. There are those ones who don't use cards, so you have to call, you go to the hospital and you have to call for you to get approval to get treated. But in most cases, you're going to get either a smart card or a cover we call SLADE. So SLADE is where you get the OTP when you go to the hospital. OTP is a message. So you go to the hospital, once you go to the reception, they're going to send you a message to your phone, and then you give them that number. Then they put it in the hospital system, and then you can be able to access the service. For the smart cards, you have to give the card, and then you can be able to run the card. So these are going to be used to help you to access medical services once you have paid for your policy. Now, the other thing that you're going to get from the insurance company, and this is something that you also need to understand before you purchase the cover, is the panel of hospitals where you can be able to get the services. So the panel of hospitals, you get it normally across the country. So there are those hospitals that are across the country, specialists, where are they, their contacts. So you get that list of all the hospitals where you can be able to get treatment, and also the list of the specialists. The other thing that you need to know about the hospitals is which hospitals require co-payment. Co-payment is whereby if you go to the big five, maybe hospitals, for example, like Aga Khan, hospitals like MP Shah, Nairobi Hospital, Karen Hospital, such kind of hospitals, there's a contribution that you're going to make before you get the service. So, for example, let's say like if the consultation is 5,000, you're going to be required to pay 1,000 or 500, depending on the policy document. So in some cases, some hospitals, they have zero co-payment. So you go to walk into that hospital, you give your card, you are treated without any co-payment. But some hospitals will be required, you're going to be required to pay a co-payment of between 500 shillings to 1,000 shillings. It also depends on the hospital. So the benefits that you're going to be discussing in the next video, the main benefits, of course, I've talked about the inpatient being the main benefit. The other optional benefits, you have the outpatient benefit. It's an optional cover. Maternity is, in some cases, it's optional. In some covers, it is inbuilt, so you cannot separate it from the cover. Optical, again, in some cases, it's optional. In some cases, it is inbuilt within the policy. And also the dental benefit. Sometimes it is separate, sometimes it is inbuilt within the policy. So I've mentioned that. So it will depend on where you are purchasing the policy. In my next video, I'll be looking at now the key features of the inpatient policies, the outpatient coverages. I'll be talking about the waiting periods, and I'll be talking about the sublimits. Please ensure you watch my next video, because these were, especially the last two, waiting periods and sublimits, this is where the biggest pain of medical cover comes from. This is whereby you find somebody in the hospital. Yes, you purchased your policy, you paid the premium, full premium, you got your cards, you're in the hospital, and the insurance company is telling you we are not able to cover your bill. Why would they say that? It's because of the waiting periods, and sometimes it's because of the sublimit. So maybe they have paid as part of the bill, and they're telling you the maximum that you can pay in your bill is this amount. Yet probably, let's take, for example, you have purchased a cover of 5 million, and the insurance company is saying for this specific bill, we can pay, for example, a maximum of 400,000. Those are called sublimits. And if you do not understand your waiting periods and you don't understand your sublimits, then I do not want you to go to the hospital and you're in for a root shock. Or at that time, when you're in the hospital, it's an inpatient, the bill is big, and you expect the insurance company to pay, and then you are told that you have to do a contribution. You need to understand what that means. So in my next video, I'll explain to you what are waiting periods and what do we mean by sublimits. I'll be taking you through what conditions require sublimits and what conditions require the waiting period, so that at least when you are comfortable and you understand when you are purchasing your medical insurance. So thank you very much for watching this video. So if you have any queries, you can reach out to me on the number provided, 0782 371 787, or you can drop me an email for any clarification on pulsepolicy101@gmail.com. So till next week, thank you very much for watching. Asante.